how does one invest in AI? Something that I think about a lot, because I believe the things you say. I believe many of your predictions around the impact that AI is going to have on the world, the economy, on all of us. And as someone that's an investor, I want to take part in that. I want to take part in the upside. So I'm wondering, do I just go buy Microsoft stock because they own a bit of ChatGPT? Do I buy Meta stock because they own because they own Lambda? Do I buy Google stock because they have Gemini and their models?
So here's the problem with the financial system. The average person watching this has no chance of making the money. They'll make normal returns, not supernormal returns. So Microsoft is whatever it is, $2-3 trillion company. What could it be worth? Who knows? 10 trillion, 15 trillion, doesn't really matter, right? That's a 5x. What, for the most revolutionary technology the world has ever seen, you make 5 times your money? That's not, but somebody else in VC or earlier, in some way, shape or form, or the entrepreneur will make all of the money. And this is the thing I don't like about the system as it is. It's kind of rigged against the ordinary person. So we're going to have your jobs replaced, you're going to have this societal change, and yet they don't get a chance. So yes, invest in technology. Don't own any other stocks. Own technology. And you will capture some of this. You're investing in your own demise. At least you'll get some high quality returns. But otherwise, the only way I can come up with, again, and we keep referring to it, is crypto.
What is crypto?
Crypto is just a technology. It's a lot of things to many people. It's just a database that's better than databases in the past. So right now, your database may be in your spreadsheet, and let's say you and I have a bet. You write it down there, and we get a third person to say, yeah, that was the bet they had, and this is what's happened. Okay. That is how databases, that's banks, that's pretty much everything we do in society is in this ledger system, it's called.
I've got a suitcase here, which is maybe a good way to kind of explain this. This is a bank. And inside the bank, which is, I guess, the middleman, you got money.
Yeah.
So could you explain it to me through the context of this, we'll call it the central bank, how the system currently works as it relates to transactions, the public ledger, etc.?
So, okay, in the old world, we both had our gold.
Yeah.
And we'd stick it in our safe or bury it in the ground. That gold was your gold. This was my gold, and I might try and fight you for it. That's what pirates did. Okay. And then we invent banks. Mm-hmm. And banks, we put it in there, and they give you a note to say, Stephen, you've got one of those coins. Raoul, you got one of those coins.
Okay, so we've both got a note now saying that.
Yeah. And now we trust this bank to give us our coins when we want them, because they're our coins. Mm-hmm. Okay, that makes sense. Safe as a bank, as people would say. The issue is in this world of smoke and mirrors, what's known as fractional reserve banking, they have taken those coins and given them to somebody else.
They've given my coins to someone else?
Yeah, they've lent it for money. So now that coin is not in there. But they've been given the money, so usually when you're just, if everybody pulls all the money out, there's not enough money. It's called a bank run. We've seen those recently, but that's a classic thing.